One of the most untalked exits in 2025. In the last 2 years, you are the wingman to Clary. Slintel was acquired by 6sense. Wingify got acquired. Shaurya from Reco sold it to Stripe. Requestly acquired by BrowserStack. So why acquisitions are so rare in India? And for first-time founders who are building now, how much did you dilute in the first round and how much did you dilute in the second round?
At any given point, you should have at least 12 months of runway so that even if, let's say, the market turns, you have some time to get to a point where either you get to profitability or you hit your metrics and raise the next round.
What made you pivot to SRE space?
It's a space where there's always going to be new opportunities and newer problems to solve, right? The entire universe of DevTooling, there's always space.
Also, the end user is toughest to please in engineering. If you need self-satisfaction also to build something really great, this space will give you that.
So really, Zenduty moment happened in 2020, and just the 6 years before that was survival. For you, why did the acquisition make sense and not raising a Series A? How would you build now again if you have to build a core AI native company? So hi everyone, Siddhartha here from Neon Show. I'm also managing partner of Neon Fund, a fund that invests in the best of enterprise AI companies. Today I'm very proud that one of our founders, that gave us a good exit are there on the Neon Show, Vishwa and Ankur from Zenduty. Welcome guys on the Neon Show podcast.
Thanks, Sid.
You can chill and relax. This is going to be a good conversation.
We are chill. We cannot be more relaxed. Probably the most relaxed that we've been in like 15 years.
Yeah. So now you're going backpacking 1 year after the acquisition, I believe.
Yeah.
So backpacking, hiking, just
And-
sleeping.
Cool. So Zenduty started almost like 10 years ago.
No, Zenduty started about in 20.
No, but the parent company, I mean.
The parent company, it started in 2017. Yeah.
2017. And when did you guys quit your jobs?
I quit in 2013.
Yeah, so did I.
So what were you doing for the next 4 years after 2013?
So 2013 to 2016, I think we just got together for a specific idea. Ideated, but then we realized that maybe the TAM's too low. We built a product, and we realized that maybe we have to focus on something else, right? So we spent the next couple of years just consulting for other startups and banks and NGOs in Bangalore. So we spent about 3 years doing that, where we were like just engineer number 1 and engineer number 2 for a lot of companies. The ones who were like, who had raised funding, or in the case of banks or NGOs, they were building some very specific modules for their banking application. So we had built that from the ground up. So we spent those 3 years in just getting technical expertise, learning the cloud, learning application development. Although Ankur came from building, he came from a database background. I came from a consulting background, so that those 3 years really helped us sort of get a lot of new skills, which we then applied in when we founded Yellow Ant.
But coming back, I think Zenduty is one of the most untalked exits in 2025 in the Indian ecosystem. It should be celebrated more, right? Why do you think more people are not talking about it?
I think it's because we haven't told many people about it.
There are not many people who knows that something has happened.
I think our customers know, and
Yeah.
I would say that, and our customers are like some pretty big companies around the world. Most of our customers were actually outside India. In India also, we had some massive companies, like probably I would say 7 to 8. I would say at least 5 out of the top 10 e-commerce companies were our customers. We had, banks, payment aggregators who are our customers. So some of the best tech companies in India and their entire engineering teams were our customers. So, and then they already know about the acquisition. So I don't think it's not well known, and it's perfectly fine. There's so much going on. That went on in 2025, right? So many IPOs that happened. I think I would celebrate that a lot more than our exit. There's so many exits that happened, and I think it's fantastic for the ecosystem.
Yeah. But coming again, I'll keep on moving back and forth like Christopher Nolan movies.
Yeah.
So when you guys were fundraising, different parts of the journeys, how tough was the fundraising journey between all the raises, and how did you choose your investors?
I think I'll take this one.
Mm-hmm.
So 2017 was when we raised for Yellow Ant. We pivoted to Zenduty in 2020. We had raised from GSF Accelerator and a clutch of angel investors around that time, right? So there, it's just reputation of the investors. It was mostly angel investors, so we knew what they had founded. We had spoken to them. We got FaceTime with a lot of those investors. FaceTime matters to us before we bring anyone onto our cap table. So we spoke to them. Felt like it was a diverse set of investors, but at the same time, we were able to, or rather, they were able to relate with our journey. So they know exactly what our needs were because they were building and running companies of their own. We had Powerhouse Ventures, which was a really good partner right from 2017 till our exit. So Powerhouse and Shri and Kshitij, they were excellent partners for us, and they kept investing in follow-on rounds as well, right? And then 2021 is where I think we onboarded most of our cap table, which include, of course, you and Neon. We had Titan Capital, we had Startup Exceed, we had a couple of funds in the Bay Area, a couple of angel investors who came in. What really mattered to us, one is that they get what we were doing, they understood what we were doing, and it's capital, or it's the kind of investors that have patient capital. These investors understood the space really well. They did a due diligence very well, right? So I like the fact that any investor who invested in us, they spoke to our customers, they spoke to our previous investors, right? They did their diligence really well. Even in your case, I think for you, with you, it was pretty natural because you had your own startup, you came from AWS, so you were already in that space. So it was extremely easy for us to say yes to you and Neon, right? You just got it.
Yeah, I was not sure, to be honest. Now I can share that Neon would get an allocation because I think Startup Exceed was already leading the round. And your first question to me was, what do you understand about SRE space?
Yeah, exactly. It was.
I think this is what we look for, whether they should understand the problem statement or not. Why are our customer choosing us? I think that was very important for us, because once you do that, I think you will relate to our customer.
I had asked that question to pretty much everyone who was looking to invest. Your answer was pretty easy, right? Because you came from AWS, you had that background, so you knew exactly what you were doing, and it was I didn't have to I didn't have to explain anything to you, right? You just understood what the problem was. A lot of the customers that we serve are also AWS customers, so you know exactly where we came from.
So yeah, a lot of customers understood our space because they also were on AWS. Investors also.
A lot of investors on. Yeah.
So because they were on AWS ecosystem already.
And how many investors you said no to during that round when there was more demand?
Quite a lot of investors. I mean, we had a dilution target. We did not want to go beyond a specific dilution. So I think we said no to a handful of investors who wanted to get in.
We did go over also based on what we wanted to raise.
So there was an initial target. I think we went over. It was oversubscribed, but then at some point we just wanted to just put a cap.
And for founders, let's say specifically first-time founders who are building now, if you can share, like, how much did you dilute in the first round and how much did you dilute in the second round?
See, it depends on the individual preferences. Again, ideally, it's not about how much we want to dilute. I think it's about the allocation that the investor wants, right? Every investor, roughly speaking, they want anywhere between 10 to 20% of the company at exit, right? So you'll maybe start at 10 and then you keep doing pro rata, or you can double down in next rounds and get a higher piece. So it completely depends on the funds or the individual investors' goals as a fund, right? They also have like a venture math that they need to work out. So ideally, I think I would say that if you're depending on where you're incorporating, I think if you're incorporating in India, you have your lead investor can take around 10%, and then anyone who's following can occupy the remaining 10%, and you can stretch it from 2025 if you want to. You don't need to. I think what if you need. So you should look at the next 24 to 30 months of runway. You need to get that in the first 20% of your dilution. If you want to extend beyond 30 months to, let's say, 36 months or 36, ideally you should not go beyond 36 months. Right? But if you want that kind of a runway, you maybe dilute another 5% more.
And how did you choose to build it profitably, as towards before the exit the company was almost profitable?
Yeah.
Right, and not raise another round.
It was a need of the hour for us.
No, this was post fundraise.
Yeah. Okay, even after that, okay. You're saying after the fundraise.
We were profitable before
the fundraise also.
Yeah.
right? And once we raised, it's not like we were trying to be profitable, to be honest.
Yeah.
So our investors, I mean, whenever we would send our monthly or quarterly investor reports, right? Including you, a lot of people would say that we may not be burning a lot.
Yeah.
We should be burning a lot more. And invariably, I'll say that, you know what, we tried burning. Every single month I'm spending a lot more than I'm spending the month before, but then the revenue is catching up. So net the burn is still low. There's nothing I can do about it if I'm burning and if revenue is catching up. So
We 5x our team during that time, and it's not like we're not spending. We actually started spending a lot on the marketing also, like hired a lot of team, expanded on that.
Yeah.
So we were spending money. Like he said, we caught up with the revenue. And also I remember during that phase, if you remember, there were certain cases because the market was not stable just before the AI boom, and also due to certain bank events in US, some of investors reached out to us to understand the cash position with the company, and they were also happy that we are one of the companies who don't need any such bridge rounds.
I think once the Fed raised the US Fed raised the interest rates, right? I think the multiples went down. Even the funding environment from 22 to 24 was not that great, right? Series A, Series A, the bar was up. The bar was significantly higher than what it was in 2021. I'm like, fine, all right. So let's just get to that ARR and maintain at least a 2x year over 100%, a minimum of 100% year over year growth, and maybe once you're able to sustain that, and then you'll be able to raise your A. That was the idea. But you keep your cash position. You have a very healthy cash position. You need to have, at any given point, you should have at least 12 months of runway, so that even if, let's say, the market turns, you have some time to course correct and get to a point where either you get to profitability or you hit your metrics and raise the next round.
So really, Zenduty moment happened in 2020, and just the 6 years before that was survival.
Yeah, for sure. So before Zenduty, I think we were working on the Yellow Ant product. We got a little bit of funding from GFF.
What was the Yellow Ant product?
Yellow Ant was it was a chatbot product. It was a chatbot that resided in Slack and basically was a chatbot assistant. It connected with like your code repositories, your CI/CD
CI/CD,
applications. That this is only
cloud
for the
infrastructure, cloud infrastructure, error monitoring tools, all those.
This is only for your developer users, but it also worked for example, sales and marketing teams as well. It would connect with HubSpot and Salesforce and Marketo and like a whole bunch of other tools, and it would give you regular updates in Slack. And there's like a whole bunch of automations that you can do as well, right? So it's sort of like a Zapier plus a sort of like a horizontal chatbot. We launched that in 2017. Got a few paying customers, but it was not a hockey stick growth for us. It was very linear. The growth was very linear. So we knew that it was not a venture. It was an entirely new category altogether. So there was like a lot of things that we realized that we were doing wrong. One is we were not focusing on maybe like a single problem and a single user persona, end user persona, and a single buyer persona, right? So it was a horizontal platform. We were selling to pretty much every department. That worked. That I believe that worked against us, right? And there were a lot of assumptions that we made that that we were not able to validate, which resulted in the linear growth. So we knew that PMF, we are not getting PMF because you know exactly what PMF would look like.
But you had raised only like 1 CR in your first round. How did you sustain for so long?
Oh, we were actually we raised about
2 CR.
2 CR.
So it was 2 rounds, one in 17 and one in 18. And I think some revenue also came. Like I still remember when we started getting revenue in Zenduty, I think the revenue which we earned in Yellow Ant helped us.
Okay.
Yeah,
that was our money.
It was but we had a very small. It was a very small team, and we were just like it was a ramen team. I don't know if that's even a real term. We kept a very small team until we got to PMF.
And what made you pivot to SRE space?
We knew the space well because we were building products. We had used a lot of the tools in the SRE space, including alert management with PagerDuty and Opsgenie, right? So we knew the space very well. We knew the problem statements. We understood where the tools were not really serving the end user well. It was a small TAM, right? But then there were only 3 players in the market. So it was easy to sort of just build something that was well differentiated, which was our thesis was that we would build an end-to-end incident management platform which would do both alerting and response orchestration, right? So that was our thesis with which we went into the market in 2020, and we got adoption, especially with companies that needed an end-to-end platform. These are companies that were by and large, they're enterprise companies, right? Teams of about over 100 over 100 engineers, building fast moving products. The companies themselves that use Zenduty were growing as quickly as we were, right? So they were really high growth companies that used our product. So we found good product market fit in a very specific subsegment of the market.
And we were also first users of ourselves. So while building Yellow Hand, we started using the alerts and also response side of it. So we thought that's one place we should focus on, and let's see how it goes.
And this is a tough space, right? So customers and investors would have asked you, how do you differentiate from PagerDuty?
Yeah.
What had been your answer?
End to end.
End to end, yeah.
It's
like we do not want to just alert them. We wanted to help them focus on the resolution part also, however we can. So that was the idea, because the space, like you said, the tough space, right? It also happens in seconds. If you can't lose customer attention in those seconds. You need to actually keep doing what can help customer resolve the incident. So that's what we focused on.
Now you have exited the company. Would you build again in this space if you were to build again?
I mean, we can't.
we can't right now. But yeah, if going back, if you had to rethink about the idea,
Let's
but
say
yes.
if there was no
if there's no such I mean, sure, it's still, we have spoken to the same buyers that bought Zenduty, right? I mean, there are a lot of problems that are still yet unsolved for them, right? And it's a space where there's always going to be there's always going to be new opportunities and newer problems to solve, right? And there's always a market in this space. So us or anyone else can always go and build in the SRE space or in the DevTool space in general. There's like it's expanding. If you look at just the DevTool market, like the entire universe of DevTooling, that universe itself and the market itself is expanding. So there is always space.
And
Also, the end user is toughest to please in engineering, I feel. So if you need self satisfaction also to build something really great, this space will give you that. And it has given us also. I mean, we are really proud of what we have built. Every section, be it performance, be it reliability, we are really proud of what we have done for that.
And this space, let's say site reliability engineering space, if you look from top down, the largest company, PagerDuty, is valued at 1.52 billion. So if somebody is looking externally, it doesn't, especially as a second time founder, doesn't look like a very attractive.
It is only, so here's the catch, right? The TAM is really small, but then there's so much adjacent areas that you can expand into, right? So you can expand. So the way we looked at it, you can either expand into, on the left is observability, which is like a crazy big market, right? And then on the right is service management, IT service management, which is again really big market. You can always expand on the left, or you can expand on the right, and you can increase your TAM and you're selling to the same customer base, which is exactly why we were just in 2024. We were just looking at we're just planning for 2025 and 2026. At some point, we knew that, hey, raise the A, keep the Zenduty growth momentum going, hire a team, and expand to different markets, and increase the ACVs and go for bigger contracts. Fine, that will happen for sure. And then you start looking at adjacent products, right? What can we sell to maybe the same customer base, or what else can we build to unlock maybe like a new group of users, right? So when we looked at ITSM, it's something that for us would have been it would have been faster for us to go to the market with a new ITSM product. We will build from scratch. Of course, that would have required a lot more capital to build, right? So ITSM was one space where we were looking at very seriously. The problem is that we didn't know the space that well, because none of us have we were not IT. We don't
We
have any
only
experience
used
in
it
the
for
IT
a
service
very
management.
small time during our corporate journey, right?
It was not. I mean, it was not
It was not at
an
the
end user.
end user level.
It was not. So it was not a specialist experience, right? So ITSM was something that we were very skeptical. We knew that we can build it, but have not lived the life of an IT,
IT
service
ops or
specialist,
IT admin.
IT ops and IT admin persona. Observability, on the other hand, we lived it day in and day out.
Yeah.
So observability would have been another sort of, it was very natural, but then observability market is it's already so mature, but it's huge, right? So the question is, how do you differentiate? And that's probably the question that we would have had to answer if we maybe try to move in that direction.
There's another thing when we're building Zenduty also, we do not want to just be any other tool. We want to see how we can add value. If we are going there, the customer should feel like they are getting added advantage switching to our tool, or the new customer should feel they are using a superior product, right? That was another case why we did not want to actually choose observability also, because there's too much there and we would only be like another observability tool there.
Yeah.
But ITSM is something where there's a lot of scope, I feel.
So which is why we got like a lot of inbound um, interest from ITSM companies
Yeah.
for acquisition, right? So we fielded a lot of acquisition offers, but ITSM there was like a recurring type of company that tried to acquire us, and that was the ITSM space.
And finally, it happened in the
It
IT.
finally
space.
happened. Yeah.
And for you, why did the acquisition make sense and not raising a Series A?
Like Vishwa said, right, we have to actually expand to adjacent market, right? By this way, we can actually do it 2 years or 3 years faster. So in the end, we are just thinking about Zenduty, how it can add more value to their customers and how they can upsell. That was one of the reasons.
So I think the main reason is that if you're thinking of building an ITSM solution ourselves, the journey would have been exactly the same as Zarant, that company that acquired us, right? We would have built exactly the same team. We would have had the same kind of investors. Even the product quality, the product philosophy was very similar to what we have, right? So we just looked at it like, you know what, this is probably what we would have built anyways, right? And it just made sense for us to merge instead of build something from scratch that is not highly differentiated, because we are not in the space.
And how did you this time? You have said there were many other offers on the table, but what made you move this time versus the other offers on the
I think it's the combination of the leadership team, their traction, the growth, which was really really good. The leadership team it was a proven leadership team. The growth was fantastic. This was a very fast growing companies aren't. It was backed by PSG Equity, which is again one of the biggest private equity funds in the US. So we knew that like the chance of post acquisition success is high with Zarant.
Understood.
Also, I think what is the acquirer intention of doing with the product, right? Here we see that the leadership vision for our space is also equivalent to ITSM. They also believe in that space. They just don't want to just add a feature for their customer, instead give them a full-fledged product. So that is also what mattered to us actually.
And what was the process in their end before they gave like a formal LOI and agreed on the price?
I think generally speaking, for any acquisition, right, when they reach out to you, any company, not just in our space, right, they have a thesis that, hey, either we build or we acquire, right? So there is this gap that we want to address in the market, which our existing products are not serving, right? So either we spend 2 years in building the product, building the go-to-market engine around it, and then and then take it from there. Versus you build a product that already has, it's already proven its value. There's already revenue it's generating, and there's a team that's already built it, right? So generally, all of these guys will come with a thesis. So what they'll do in the initial rounds of when they interact with you is they're testing the thesis. Okay, will this product fit well with our existing suite of products, right? Is this a team that has the same sort of working environment as us? Work culture is what you call it, right? Do they have the same work culture as ours? The leadership teams, are they in sync, right? Then the financials also, are they running the company in a way that suits our business model? So for example, let's say you're a PE owned company, right? Profitable, rule of 40. You try to go and acquire like a startup that is venture backed, that is nowhere close to the rule of 40, right? So there, from a financial perspective, it may not be a fit because those guys are burning way too much. So you acquire and then maybe you cut costs. That's one way to do it, right? Versus for us, I think we were in a very good, we were in a sweet spot, right? Which is we can grow, if we wanted to, we can grow at venture scale, or if we want to, we can grow at PE scale, right, or P level. So I think that's probably what sort of sealed the deal for them.
Understood. And let's say this is for founders. Uh, when they gave the first LOI, how much room was there to play for price and terms for you?
Hmm. This is confidential, yeah. This one, I mean,
Yeah, but how would we know the room, right? But
yeah, we
did-
don't know what the room
So
was.
then that's why I'm asking, how did you play that? That when you
Um, and this is like general. It's
like
not.
the,
It's
the
not.
rule
It's
is
not
25% up and down below what is the quoted price, or it can go.
so it completely depends on. And again, this is general. Okay, it's
Yeah.
nothing to do with our acquisition. But in general, I think what I have seen is you look at the value that the acquiring company gets by acquiring you. So it's a new product plus revenue plus team, right? So you're getting like some people just want the product, not the team. Some people just want the team, not the product, right? Some people want the product, but they don't care about the revenue, right? So it's a combination of these three sort of factors. So I think your leverage depends on which part they want more, right? Or which part do they want at all?
Yeah.
Do they care about whether you have revenue? Yes, because that gets added to their revenue and therefore
Yeah.
their valuation. Do they care about their team? Yes, they want to expand into certain markets. They want to maybe have a center of excellence in certain regions. Yes, tick yes. And then finally, do they care about the product? Right? Yes, you can. They want to get your product in, then upsell to their cross sell to their customers, right? So this will give you sort of you can pull any of these levers to maybe get a better price.
Understood. But let's say, did you check with other founders who had sold companies before on the process? What was the
I think we did. So we spoke to a couple of founders. We spoke to mostly our VC network, including you, right? We spoke to all the investors that invested in our company. Few of them actually got acquired themselves, right? So we spoke to our investors that sold their own companies. Um, so that gave us an idea on what would be like a good strategy to go into an acquisition, and I believe that helped us. Yes.
and how fast was this process end to end from discovery till closing?
Um, Ideally, it should be done within 30 to 45 days.
Okay.
Yeah, but I think for us it was slightly longer.
And specifically, let's say if you had to incorporate again, where would you incorporate?
Hmm. Um,
Will that be controversial?
it again depends.
Yeah.
Like depends on the kind of company that. See, if you're building something that's serving the India market, then just stay put in India, incorporate in India, right? If let's say you're building in the fintech space or insurtech space, or
No, but let's say I'm talking about exactly if you have
So
to
if
build.
it
then
would have
you-
been
Exactly.
DevTool, I think it would have been better if we have registered in US.
yeah.
And why is that?
Because the DevTool market in US is much more mature than India. India is really good for SaaS, I feel, but DevTool as a segment of SaaS is much more mature and appreciated in US.
Generally, you want to invest where your customers are
Yeah.
highest, right? So yeah, if your market is in the US, then you incorporate in the US.
But let's say in your case, 50% of the customers were from Indian
No,
market.
no, it was not. Our no. So in terms of just logos, 10% of our logos, 10-15% of our logos were India. Like maybe about 20,
Sure.
25% of revenues were India. But 50% of our logos, 50% of our revenue was actually US.
Got it. And being like deeply technical founders, right, doing enterprise sales for the first time, how did you go about learning enterprise sales?
It was hard. It was hard, but it's you approach it like it's like project management at the end of the day, right? You approach it like a process. Everything has a process. I do believe that post acquisition, I think we got a much better idea of the process. I think we were able to polish a lot of the things once we got the acquisition done. But even pre acquisition, while we were a standalone entity, it was initial days I think were a little unstructured,
Yeah.
but then we were able to give a good solid structure to every sale that we made. So by the time we got acquired, I think it was a good process.
And did you ever consider, since you mentioned your target market is US, moving full time to the US, shifting your base?
For us, when Zenduty started growing, it was COVID time. It was very difficult. Uh, we thought we will move and actually maybe expand there, but I think we were doing really good growth within India. But the plan was, if we would have not have acquired and maybe gone for the next round, maybe we would have.
At least one of us would have been
Yeah.
there.
And how would it have helped you, let's say, since you were already growing in India?
Sure, but then India I would not say that India would be the engine of our growth moving forward, right? The engine of your growth will always be, if you're in the DevTools space, the engine will always be the US.
But you were still able to acquire customers sitting here in India.
But only to a certain level, right? I think would we be able to do like multi-million-dollar deals on a consistent, predictable basis? Maybe not, right? So for that, you need to, if you're the higher your ACV, I think the more sort of the higher the the higher your ACV, the more the need to stay near your customers.
And where you met, Zarant, were you putting up a booth, or it was just bumping them into the attendee during
I think I don't think they met us at I don't think any of our inbound, maybe with the exception of one, I don't think any of the folks that came in met us at our booth. We had a lot of, so whenever you go to any event, right, any conference, especially reInvent or KubeCon, right, there are like a lot of scouts who are out there, like cop dev guys or PE guys or VC guys, right? So these are the three categories that are always out there trying to network with every single company that has a booth, right? So it really does help if you have a company with good traction, and it does pay in the long term to have a booth, even if you're not able to. I mean,
Did you had a booth when Zarant met you or not?
yes, we did. So again, I don't think we met them physically
We
at any
met
of our
them. We
booths.
did not meet.
I
them.
think all of these guys that reached out to us, they knew that we were presenting at some of the conference, and they reached out to us cold over email, right? So they engaged us, but I don't think we
But
met.
our presence actually
The fact
showed
that
them, look at this company.
the fact that you're actually a company that is spending all this money and doing a booth at any of these conferences, it's a signal that hey, these guys they have PMF and they're a legit company, they have legit customers, and it's worth having a conversation with them. So it signals, there's like a lot of signaling power in going to these events.
So is it good to assume then 50% of the folks that came inbound
Yes.
for this process met you because you had a brand presence at various
conferences? And even we are also on G2. We were highly ranked on G2, and even on Google, right? Our SEO was pretty good, so they could come through either looking at us, either because we presented or we had a booth at any of these conferences, or they just came in organically through Google.
So you would really advise founders to put an effort in these events in the US.
Only if you're PMF. I mean, look, don't just like build a product and then just show up at a reInvent. No.
I think we were advised by you only that we should reach a certain stage before we put up a booth. Because reInvent is there where all the serious guys come, and you would want to actually go there with your perfect pitch, right?
You want to put your best foot forward. And it's something that you told us. We probably would have gone like a year earlier if it wasn't for you. Okay.
But I still remember we attended reInvent even before putting up a booth, and even attending, not actually putting up a booth, was a really good experience. And the moment we entered there, the first day itself, we understood that this is our market.
Yeah.
These are the people who we have to actually show our product.
But be aggressive and do trade events in the US. I mean, have some paying customers. Have like a good number of paying customers, and once you know that hey, the customers are sticky, you don't have a leaky bucket, retention is good, the customers are growing. Once you're seeing evidence of that, then you can go and spend not a lot, but you can at least put like a small booth in like a couple of these events. I think it's always worth it.
Because any prospect who is coming there, they want to see success stories. They do not want to be the first person to try your product. So it's always good to actually have those testimonials, validation from your customer, and then go.
A lot of the companies I saw that a lot of the founders that raised like in tens of millions, right, with no product. They built the product, they
And they
launch
survive.
it on
Launch
reinvent.
it on reinvent.
But then they're proven founders mostly. They're not first time founders generally. But yeah, I mean, if you're ideally, you should have some traction before you do any of these events. And the fact that you're doing these events signals to VCs, corp dev, and PEs that you're ready for the next step. Either that's a new round of funding or an acquisition.
So this is the honest feedback about Neon, and you can say whatever you feel
Sure,
honestly,
sir.
right? Even bad things. What value did you like the reason that you tied up with Neon or partnered with Neon? What value did Neon give, and was it less than you expected or more than you expected during the journey?
A lot more.
A lot more.
Than what you'd expect.
So I would personally say that means like we always actually value our previous investors like GSF and Powerhouse because they have been there. But you have been very much approachable, even though you participated in 21. You would be the one of the first few investors. If even we have to come up with a stupid question, you can cut that part if you want to. But yeah, we would feel very comfortable even if we think okay this may not go well. But and the advice have always been helpful.
I like the fact that there were like a couple of investors on our cap table that specialized in a very specific area, right? So we had you. You did a lot of SaaS investments. You did a lot of SaaS investments that are cross border, especially selling into the US, right? So it was very easy for me to just ask you, hey, this is a problem that I'm trying to solve from a go to market perspective. Is there anybody else in Neon who is either going through the same problem or has faced it? So I probably asked you like tens of times when whenever I had a
I'm
specific
also
query.
learning along with you. It's not like
Exactly.
I have
But
all
then
the answers.
but then it seems like you're learning faster than I am, right? Because you have inside information into like all of these other companies, not just portfolio companies, right? You have so you've spoken to so many founders. By now you know exactly what the tricks are, right? And so even if it's like one of those really small problems that I'm not able to figure out on my own, I was able to reach out to you. And then there are other sort of specialized investors. I had like at Powerhouse, which also has a presence in the US, right? I had Secure Octane, which does like only infrastructure and security. So there are like a group of investors on our cap table that I was able to reach out for, by and large, for a very specific problem that I'm not able to solve, right? I think you and Neon, I could reach out to more general problems. So even if let's say it's a query on taxation, or if it's a query on uh, just compliance, right? So I can always reach out to you for those matters as well. I was able to do that.
Yeah, I think we are trying to always improve our GTM engine. Now, let's say back then, my 2 cents on doing events was go when you have PMF. Now, it's evolved with the market. I tell founders, build your PMF as you start building your brand presence.
Yeah.
Obviously, if you have money.
Exactly. That is always the constraint, isn't it? I mean, but then you can always do it. You can always do it in a small way.
Yeah, or try to get free passes as speakers. Like
Exactly.
Rawal-
Yeah.
So
Exactly.
I think that worked for us also that we were able to be speaker at really good events worldwide.
Yeah.
And we keep participating. We used to actually keep participating on that, and that actually helped.
Yeah.
And even because event is one place specifically in the US when a lot of your target customers are hanging out and they don't know what they are looking for
Yeah.
specifically, right? On 4 days in an event, they are not there to only buy. Yeah. Right. So
Because if
people
you
come to
see
open.
all the events in US, right? Even these customers have spent a significant amount of money coming to that event, right?
Yeah.
So they are not just casually there; they are actually there to do business,
Yeah.
and they want to actually capitalize on that. Yeah, so that's what we have learned actually going to these events there.
So if I would today, if you are a core AI native startup, like my thesis would be, and you're honest with yourself, and it's 1 year down the road to product market fit. I would say don't build in silos. Attend 50 of those events, and as a founder, if you have the bandwidth, spend that time in storytelling, even in one-on-one interactions or throughout the year at events, even to validate your thesis.
Correct.
Throughout the year.
Yeah.
Do 40 to 50 events if you have a good team who is taking care of all the ops and product. And then once you're the product market fit, then go blockbusters on making sure that in your target category, they hear about you from 5 to 10 different sources.
Yeah,
An event could be one of the largest sources.
perfectly said. Yeah.
Yeah. How would you build now again if you have to build a core AI native company? What will you do differently this time?
I'll take this.
Yeah.
Um, I think I'll start with a small team, but an accomplished team.
Hmm.
So I'll hire highly experienced folks who are experts in uh, either the industry or have expertise in solving either the entire or maybe parts of the problem that I'm looking to solve. So hiring and your core team members matter. So we'll be very selective in um, choosing our core team. Um, Second, I think I'll from a GTM perspective, of course we have to validate the problem first, right? So go and seek as much data points as possible to sharpen your thesis, right? Do as many sort of industry interviews as you can. If you have a thesis regarding a specific problem statement, go and validate it very aggressively and do like hundreds of interviews, if not tens, right? So only once you validated the problem and validated maybe a version of your solution, only then you start building, right? So we won't build from day one.
Hmm.
We validate and then we'll build. That'll be those are like some of the bigger changes that I'll make.
So
this year.
Another, maybe start understanding AI from the first principle perspective, how things are working. Like there's a lot of hallucination which happens in AI. So if you understand how tokenization works, even that particular part, I would also say emphasize on from the tech perspective.
Okay.
and uh, first time you had the luxury, I would say it was essentially not a luxury, but you had the survival skills to survive for 8 years and then figure out product market fit.
Sure.
Do you think if you start again, would you have that same figure out product market fit in that kind of time?
I mean, now you sometimes the writing is on the wall and you just know when that's on the wall, right? So you just make a peace with it and you just move on. So failing quickly, if you have a specific thesis and it doesn't pan out, you fail. It's better that it doesn't pan out within like a year or like you know if the data says that there's no product market fit, maybe it's time to look at why there's no PMF. Maybe sharpen your focus on the problem statement. Maybe look at another sub segment and see if you can solve that one problem in a 10x better way. So generally, that's how we've been able to um, move ahead, and we need to find those answers as quickly as we can.
I think during our first phase also, we had gone through multiple pivots, right? Even those pivots also became shorter and shorter. Like Zenduty from yellow and took us like 4 months maybe to our first customer. So I think we're already there on that segment. I hope we don't get to that level because from anyone 8 years or 6 years whatever. So it's still a long journey. We were able to do it because we were in a different phase of our life, and also we were learning a lot of things. I think we should be much faster now.
If you have to if you have to make the decision to pivot, it's better that
Yeah.
you make the decision as quickly as you can, not spend like 2 years
Hmm.
2 years on a problem and then pivot, right? It's better that ideally you should be validating it within like 3 quarters.
Like he said, we'll be actually talking to customer a lot more before we even start working on any idea.
Or even if you start working
Yeah.
building, as in when you build more, just make sure that you get the right feedback as you continue building. Keep iterating.
In AI, what my observation in Neon portfolio is like 50% second time founders, right? Like Atomic Work, GTM Buddy from by the founder
Sure.
of Grey Orange. I think first time founders have a bigger advantage in AI waves. The reason is you're not carrying any
Baggage.
bags from the SaaS era, and you are born into a AI native world.
Sure.
Like so the younger you are, that's why you see companies like Mercor getting to 10 billion kind of valuation with good revenue. I mean, there are multiple such examples.
I think that will be there for the first phase, but in any phase, if you see any actually uh, any wave which we have seen, right, be it AI before it was SaaS, right? Initially, it always starts with a new player, but always it dominates with someone who needs to who have experience, because you need companies who will survive longer. I know a lot of AI companies will survive. There are a lot of legends we're already seeing getting groomed, but I'm just saying, some with certain experience, it's not just a technology. It's understanding of what actually customer needs. Everything will come down to what customer needs, and be it a second time founder or be it someone who is the first time founder but has worked in the industry, have that understanding that what actually customer needs. That will always help.
Are we doing like contrary to like a second time founders will
No,
not
no,
be
no. I'm not saying
succeeding
that.
in the SaaS environment? I don't know, yaar. I mean, let's see. Let's देखते हैं कितना है दम. All right, it doesn't. I don't subscribe to that. First time founders may. You're right. They're not carrying any of the SaaS baggage, but it's also new for them right now. Nobody. A very few select group of people have been able to sort of figure it out. It's only a handful, actually, if you think about it, right? And they all sort of come from the same valley environment. So let's see. I mean, I think for second time founders, it's an advantage. If you're able to have a very thorough understanding of AI, I think you can think like a first time founder as well. I don't see that as a big challenge.
What location, if possible, not a constraint, would you choose to build it second time?
What a SaaS company?
No, location. Which location would you build it from? Would it build from India, Valley, or any other?
Both. It's a combination of both. So I think
We have a sweet spot for Bangalore. I think there are really talented people in Bangalore, and you can build a team there. But yeah, you should also add certain advantage which Valley offers. So if we build it again, we should have a diverse team, I would say.
I think first time there was no value advantage apart from investors.
yes, yes. That was the only minimal advantage that we had. Right? I think having presence in both Bangalore and the Valley, I think it has worked for a lot of our peers. So and it's a playbook that's already been established. So what is working will continue to work.
Yeah, but nobody talks about the 13 and a half hours, brutal grind you as a founder
Yeah.
do day in, day out. Like
Yeah.
a lot of people talk about India-US corridor.
Means I think you make it work. Means I've seen those founders also who are working in different time zones, and they have been able to work. And those companies have grown significantly in last 10 years actually in SaaS space also. So I think being a founder, you always find a way to make it work. Either one of them will be traveling a lot, or either one will stay on different times on one other. In the end, you have to make it work. That's what I feel. But yeah, always one advice or one pattern which I have seen is any founder should stay closer to their team, be it their part of their team or just their team. They should be closer to them.
There's one founder who stays closer to the team, the other founder who stays closer to the customers.
Yeah.
Customers and investors, yeah.
Then now you have some money, that you can put in your next startup. So what would be your play? Would you want to raise money, or you want to start with your own money if you do it?
I mean, I'm not sure about that. So the if you're building SaaS, I think the cost to get to PMF, I believe, has drastically come down. Right. So you can build very quickly. You can validate very quickly, and you can sell very quickly. I mean, it's like so many solutions out there that can help you go from zero to whatever, zero to from pre-revenue to revenue and pre-product to product, right? And you don't need a lot of capital anymore. So most likely, I think, I don't know, maybe the initial couple of versions till MVP, probably you're not going to be burning a lot, right? Unless, of course, you select a very hard problem where you need like if it's, let's say, it's very research intensive. There, I think you'll have no option but to raise. So
But
if it's just a SaaS idea, then I don't think you need, for the initial phase, you need to raise a lot.
But it contradicts with what you said earlier, that if you're building next time, second time, you would want to build with a small team but a stellar team. And obviously,
Correct. So yeah. So that is if we are building something that is research heavy, right? So there's like a lot of R&D work that goes into what you're building. What I just said was for maybe like a general SaaS product that it's more it utilizes existing services that are already out there, and you're patching it up and you're building a service for it. Could be like a vertical SaaS product, right? So as long as there isn't um, any serious, or as long as there isn't any material R&D work that goes into what you're building software wise, yeah, you can always do that quickly now.
Got it. So it's a conclusion is you would start with your own and then see if it's going into research direction, then only research.
Depends on which idea you choose, right? If you choose an easy idea, you can do it yourself. I mean, if it's a very, and people are doing it every day, right? Everyone's like vibe coding, and anyone can just vibe code a SaaS company these days, right? So if at all, we'll choose a very hard problem to solve. We would want to choose a very hard problem to solve.
Why?
Because I think the harder the problem, I think the higher I believe the higher the returns.
What are the current hard problems in your mind, not related to starting up, but which you think other people are solving are hard problems?
I think like a lot of the problems that require like dealing with regulation, those are what I would put in the hard problem category, right? You're dealing with.
Examples?
So let's look at Razorpay. Razorpay, I think, solved a very hard problem, right? Like integrating with these payment gateways and building a very reliable payment gateway, right? So um, I believe they solved a very hard problem, which is, and they did it in a very developer centric way, which was their moat, right? That was a differentiator and eventually became their moat. Right? So in that way, I think those are that is one of the harder problems to solve. You can look at like OpenAI, of course, is one of the hardest problems that you can solve. They almost took like what from 2016 till 2023, about 7 years to go from conception to market, right? And there's like a lot of research that went into um, you know building what they have built. That was a hard problem. So these are the categories of problems that would require like immense amounts of capital. So there are certain problems that need a larger group to work on it. If there aren't any solutions in the market, you need to sort of build those foundational elements, and you need to build a team for that. And if that is a problem that you're going after, then you'll have to start with a decent amount of capital from day one.
So why acquisitions are so rare in India?
How?
Acquisitions like yourself are
Because
rare
the
in India.
our startup ecosystem is young also, right? If you see the first startup which we remember, which actually inspired us also, maybe other Flipkart, Snapdeal, they all started in 2008. And those either they are getting IPO, if you see this year, last year, 2025 has been full of those IPOs, or the acquisition were happening in 2016, 17 for the Flipkart. But in SaaS space, I can say that a lot of companies which get acquired, also we don't get to hear about them. We don't glorify them also.
Yeah, I actually agree with you there. So there's like supply and demand, right? So one is if let's say you're a SaaS company in India that's building for the world, and you have a lot of customers, say in the US, right? So you're bound to quote a lot of the acquisition offers eventually. Once you reach a certain.
But they are also so rare. Like I can count in the recent last 2 years, you are there. Then Shruti she sold Wingman
Sure.
to Clary. Uh, uh, Slintel was acquired by Sixth Sense. Uh, then
Wingify and
Wingify got acquired. There's one more, right? Shaurya from Reco sold it to Stripe.
sure.
It's hard to find.
A handful.
We had from our portfolio again after you Requestly acquired by BrowserStack,
correct, yeah.
Logic acquired by Apika.
Yeah.
So essentially, like one more happened, Affable by BrowserStack. But in Neon portfolio, let's say out of 5 profitable exits, 4 have been M&As and 3 are DevTools.
Sure. So that says something, right? Like DevTooling, I think I'm guessing at least within Neon, it has a higher chance of acquisition. No, look, so couple of factors go into acquisition, right? One is your current scale, your growth rate matters, right? And your product and your geography matters. Geography of your company and geography of your customers matter, right? So generally, if you don't see a lot of Indian software companies acquiring Indian SaaS companies. You don't see that. I think in India the mentality is कि हम बना देंगे, हम खुद ही बना देंगे types. So I don't see. So maybe Browser Stack acquiring Requestly was probably a one-off, but we don't see a lot of if we don't, or even if they do get acquired, we don't see a lot of Indian companies acquiring Indian software companies or Indian SaaS companies acquiring Indian SaaS companies. It's mostly.
But now we are talking global, let's say. But that's also not happening at
It's
scale.
going to happen now, because now I do believe that Indian companies at a certain scale, you ask any SaaS company that is doing, let's say, more than $1 million in ARR, very, very likely that they must have fielded a couple of acquisition offers. They may not take it because they didn't like the multiple, or maybe they got a multiple because the growth rate is not that high, right? So a lot of acquisition offers are floating around. They're just not taking it because either the acquisition price does not fit their model. If, let's say, and a lot of these SaaS companies have raised from VCs, so they've raised at a certain valuation. If they have not grown into that valuation, the offer that they'll get will be less than the previous round's valuation. So there's like a lot of these constraints that you have to navigate. You want to, and even the investors that are part of the cap table, if, let's say, it's a dominant investor who has invested in multiple rounds, right, and has a good share, they may want to exit at least 3x of the previous round, right? They don't want to exit at whatever 1.5x or 2x. So there's like a lot of these factors that determine why Indian companies are getting acquired or not getting acquired. So in the US, I think, and I've seen this, right? In the US, I think the investors are actively facilitating exits as well, M&As and exits. A lot of the companies get acquired, so an investor will facilitate an exit from what portfolio company by another portfolio company.
I think platforms like A16Z can do it because one of their portfolio companies is Databricks.
Correct. Yeah, Databricks acquires everybody, right? Maybe that's how they construct their portfolio, right? Okay, maybe if this company gets to a certain level, you're de-risking by facilitating some kind of an acquisition. In India, I don't think I think VCs are facilitating acquisitions. At least the bigger VCs, they have a network of potential acquirers that they connect with the founders. But ultimately, it's also, from a strategy perspective, it's not something that we did at all, actually, which is that in the US and even in EU for that matter, the founders are actively in conversations with the companies that can potentially acquire them. Like, if, let's say that
build a stronger relationship
for our company, maybe if we could have gone out there a lot more, maybe network with observability founders or ITSM founders, right? So there, I think it's part of the startup culture where I'm building in this space. It's adjacent to this other bigger space, and therefore I need to go and build relationships with the companies and the founders and the exec team of these other companies that can maybe at one point may acquire me. And that's, again, acquisition is a backup for them, right? You obviously want to grow as quickly as you can, so partner with them. You can. There's like so many different possible scenarios that you can unlock. So you're de-risking by net. So I think we need to do a lot more of that. Also, our acquirers, most of our acquirers, and again, when I say acquirers, the ideal acquirers, right, that can give you a good multiple, they're all in the US. India may, since the market, the number of acquirers are really small, probably one or two max, right? You won't get a really good multiple, or you won't get a good price unless you're like really strategically valuable to them. But a lot more of the acquirers are actually in EU and in the US. So you need to really go out there. You need to be in the US. You need to like constantly network with these companies, build a relationship, build a working relationship. Even if possible, build a GTM to GTM relationship. That is even better. If you can do that with your potential acquirers, I think that can unlock a whole new set of possibilities.
In your case, you didn't do that, right?
We did not, but then I think it was all inbound, right? Our entire company was like built on like inbound PLG self-service types, right? So while we may not have actively, let's say, allocated a certain percentage of the week in networking with our potential acquirers, it was never part of our strategy either, right? Because we knew that, hey, we're growing really well. Unit economics are good. Retention was good, right? So all the metrics were trending in the right direction. Our investors were happy. We were ready to raise the next round. We didn't have to. We were not thinking about acquisition at all, actually. Right?
We never planned it. Actually,
we never planned it. But then our marketing and our branding and our presence was really strong. So ideally we don't have to I mean, you can network at the same time, and you can also, make your brand be present. Right? If your brand presence is high amongst your potential acquirers, that's also good enough. Make sure that you're visible in that space, right? In the same material, you get visible in G2 or Gartner or any of the social media spaces, right? So if you're able to do that and you have really strong inbound, that is also good enough, I would say. If you have a one-to-one relationship, of course, that is always that increases your chances. But if you don't have that, that's fine. We got a lot of inbound, so I don't see it as a blunder that we didn't actively, have like an outbound strategy for acquisition.
Thank you so much, guys.
Thanks, Sid.
Thanks,
know,
Sid, for having us.
I feel very proud that Neon was key part of your journey.
Yeah, it was a very big part of our journey. Thank you for the
I would
guidance
love
and
to
the
build
mentorship.
with you. As always, I would love to build with you again.
Yeah, always. Thank you.